To Business in Vancouver, the daily business program from the Business in Vancouver newspaper and BIV.com. I'm Kirk LaPointe.
And I'm Hayley Woodin. We're going to shift from talking about BC's most topical industry at the moment to one of its most traditional. The province's real estate prices and demand for real estate have surged over the past 4 years. Meanwhile, the global mining industry today is recovering from the past 4 years. Joining us with a look at what this means for BC and Canadian mining companies is Frederick Davidson. He's the president and CEO at Energold Group and at Impact Silver. Thanks for joining us.
Oh, thank you. It's a pleasure.
So if we look back at the last year, Energold Drilling was actually named on the TSX Venture 50 as one of the listing's top performers. What's helped you over the past year? As you know, we've seen global commodity prices take a bit of a dive, recovering now, but it's still been a challenging past little while.
Oh, challenging would be an understatement.
Yeah.
We long ago diversified a little more broadly than some of our competitors, and we actually do drilling for both minerals, energy, and we call it soft energy as well, because we do geothermal, seismic, and manufacturing, and including water. The idea being is that it is, as you pointed out, a very volatile industry, and we wanted to make sure we were sort of somewhat balanced. I think, though, that the recent appreciation in the stock reflects more than anything the market's anticipation of the recovery in the mineral side, and it is starting to recover. We're definitely seeing an uptick in our volumes.
What are the survival skills that are necessary, both at a corporate level and then at an executive level, Frederick, where you have to have some kind of clinging to hope that it will come back?
Well, survival skill number one is this is a volatile industry, so you don't get extended in terms of things like debt. Hey? Yeah. Always keep a clean balance sheet, working capital's tight. But I think the other side was we did have that ability to diversify our activities. So a drill rig which wasn't working in minerals could be working down in our energy or in our water. And that gave us the ability to sort of sustain ourselves through the really ugly downturn we had in the minerals over the last 4 years.
What about the toll it takes emotionally on your company, your people, the people who obviously want to succeed but recognize that the more they drill, the less return there seems to be?
Yeah, and it is. It's an incredibly tough thing on the team. I think they believe in, especially what we're doing, and that is we've approached the industry a little differently. We've developed rigs that are sort of highly modular so they can be moved in and out of locations. We reduce the environmental impact down to a bare minimum. We employ many of the locals so they feel they're part of the community and at the same time part of what we're doing. It's a morale-building process. I used to have a full head of hair before I started this business. But it's one of those that we recognize it is cyclical. So, and I got to admit, this is probably one of the worst cycles we've seen in a long time. But fortunately, at the same time, as I say, we were drilling in energy and things like geothermal, and those have continued on. So people know that they have a future with us. And yes, it might be tight now, but there's a growing future and an expectation that the recovery is now starting to happen.
What's the size of the opportunities in energy, soft energy, as you put it, or in the green sectors that you've now diversified to, compared to, say, the opportunities that you've seen in previous years in mining?
Oh, yeah. I think if we see a recovery in mining, it's not going to be as dramatic as it has in the past. I think that's now getting to less of a bubble because venture capital can go to other places besides mining and oil and gas, the more traditional investments. So what we looked at is where is our industry drilling going? And one of the ones we see, we call it soft energy, but what it is geothermal, and this is what they call ground loop geothermal, where you take liquids, run them through the earth, it picks up the earth's temperature, and it provides heating and cooling for structures. The installation is fairly expensive up front, but their operating costs are virtually nil. So rather than providing energy, what we do is we reduce the demand for energy, and that's a real growth side. I'd expect it to be somewhere between 10 and 15% of our business this year, as is water, which is another growth area. Clean water, whether it be in Africa or California, acute shortage of it. People don't know how to grow water without contaminating various water tables, etc. We do. Requires a high degree of professionalism, and when you take your drillers and you treat them like professionals, they respond to that.
You've had such experience in this wide industry. You must have seen times when technology was not necessarily advancing at a very rapid clip, and that you were going through your boom and bust cycles with somewhat the same degree of hardware in front of you. Technology, though, has likely changed that, hasn't it?
Yeah, it has, and not in necessarily all the ways people would expect. Traditionally, somebody says, well, technology improvements means automation. In most of the places we work for drilling, for minerals, for instance, we've designed actually very simple rigs. They're modularized. They can be moved in readily, and rather than having campesinos, small farmers, watching a bunch of gringos go by and dragging a big drill with a cat, we actually get the campesinos working with us. They carry in some of the parts and supplies, and train them quickly. And the end result is we've created a situation where there's a social positive response from the first day we step onto the ground. And the second part is environmentally. We don't create roads across their small little farms, what have you, and just pay arbitrary compensation. We can take traditional trails. So there's virtually no environmental impact, and the social impact is dramatic and very positive.
Has that been one of the things that you've learned over the years about the necessity for local buy-in or local involvement as being a key ingredient in the sustainability of a project?
Absolutely. Whether you be in mining, we're sort of the leading edge of mining because we're the first people in, we're doing the initial drilling, what have you. And the very first impact you make on the local community is what's in it for us. And our attitude is jobs, participation. The workers come home, they talk to their family about what we're doing. They know that we're not creating an environmental issue. At the same time, they are, in many cases, giving them first employment they've had in their lifetime, plus training. Case in point, in Mexico, we have about 450 employees. We only have one Canadian there. Everybody else is a national.
We're speaking to Frederick Davidson. He's the president and CEO at Energold Group and at Impact Silver. It's been an incredibly difficult time over the past several years, as you said. So when you have companies maybe cutting costs or really looking to stay afloat during a resources or commodity slump, what happens to CSR policies or a willingness on the part of companies to continue to invest in, say, technologies that are greener or in giving back to local communities?
It's always tough. And there's other aspects to it, of course, and let's broaden that definition to stakeholders. In many cases, all of the people who may feel they're a stakeholder in the project, whether it be directly or indirectly, have perceptions about the project, and most of the problem we run into is not with the stakeholders per se, but the dividing up, if you will, of the spoils. And when the market is strong and the prices are high, everybody has a very high expectation of how much money's coming out of it. The problem is that happens for about 2 years. In about 5 years, we're struggling to even break even. And it's very much a case of educating the stakeholders that the proverbial, you milk the cow, you don't kill the cow. And that's a project that's called education. What starts from the government level down, and even governments where we work in 26 countries. They have no comprehension of that. They have no comprehension of return on capital or in some sort of investment that has to get paid back sooner or later. So it's an education process, and we start from the very bottom when we talk to the people in the field, and the very top when we have to talk to ministers and mines, etc., and point out to them that people don't invest unless there's a possibility of a return.
You sound, in your experience, very resilient and very reflective, Frederick. I wonder whether you're able to look at yourself and define how it is you've become a different leader with all of these experiences.
That's probably why. You bash your head against the wall, and sooner or later, hopefully sooner, you realize when it's not appropriate or practical. When we developed these rigs, for instance, about 15 years ago, the smaller rigs that we use, we ran into that situation where we wanted to do some work. The limitation of the current equipment available at the time was we knew we'd run into social issues. And those issues told us we had to look sort of afar in terms of a new technology or a new approach. I think anybody who's going to survive in business has to recognize that flexibility and creative thinking is critical. And unless you do, you're not going to be around for very long.
Frederick, thanks so much for joining us on the program today. It's been good to have you and your insights and your wealth of experience on the show.
Oh, my pleasure. Thank you.
That's Frederick Davidson. He's the president and CEO at Energold Group as well as at Impact Silver. And that's it for our show today. Thanks for listening to Business in Vancouver. I'm Hayley Woodin.
I'm Kirk LaPointe. We'll be back on Monday. Up next, though, is Sense of Place with Manel Matani.